Hi guys, keep watching KS tutorials. They're the best.
Hello guys, I am Kennedy and I welcome you to KS Tutorials. KS Tutorials, keep calm and then balance on. Keep calm and then balance on. On today's episode, we'll be talking about the business account. The business account. Someone may ask, what is business account? What is business account? It is a summary of business transaction. The summary of business transaction. So this business account is more like a folder. Let's say in the office we have a place where we keep documents. That particular place, let's say, however it is arranged, is a folder. So that's the particular folder we are talking about. So business account is more like a folder where we keep business transactions, where we record business transactions. So let's say a business transaction like bought goods worth 5,000 Ghana cedis is a business transaction. That business transaction, let's say if we are recording, we have two accounts. We have the purchases and then maybe the cash. We have the purchases and then the cash. So where we record the purchases in the purchases account, we have the purchases account and then we have the cash account. So these are the accounts. It says it is classified into two. We have the personal account and then we have the impersonal account. The personal account and then the impersonal account. So when we talk about the personal account, we are talking about the leisure accounts of individuals. The leisure accounts, more like it records the accounts of individuals. Let's say Ahmed's account, Kennedy's account, Emmanuel's account. So let's say you take a loan from Emmanuel, you are owing Emmanuel, so that the name of the account becomes Emmanuel's loan account. So the personal account records such account. Do we get it? The personal account records such account. And then we have the impersonal account. The impersonal account, they record as accounts of real assets. We have expenses and then revenue. They do not record accounts of personal names. It doesn't record to individual accounts. This one records more like assets, expenses, revenue, and other liabilities. Do we get the differences? Okay, so we have accounts, we have the types. So we have the personal and then we have the impersonal account. Under the impersonal account, we have the real account and then the nominal account. We have the real account and then the nominal account. The real account records assets account. So motor van, we have cash, we have debtors, we have building, those real assets. That is what that comes under the real accounts. And then we have the nominal account. The nominal account also records expenses, revenues. Yes, it records the expenses and then the revenues. Do we get it? Okay. So now we come to the accounting treatment of the account, the treatment of the account. So let's see, we have real account. The real account, this one, the real account, that is the assets and then the assets. So the assets, when whatever comes in, we debit it. So another real account, it says debit what comes in. So when we are receiving money, we will debit it. When we buy motor van, meaning motor van is coming into the business, we will debit it. When we construct a new building, we will debit it. So when assets increases, so this sign shows that it is coming in, it has increased. When our real account increases, we have to debit it. When it decreases, we will credit it. So we will credit whatever goes on. So let's say we have cash and then we've given part of the cash to someone. We have decreased our cash, meaning cash has gone out of the business, meaning we have to credit our cash account. And then let's say we have motor vehicle and then we sell some of the motor vans. We have decreased the number of motor vehicles or motor vans, or the number has decreased and then some of them has gone out of the business. So then what do? We have to decrease our motor van. We have to decrease our motor van account. Okay, so let's go to the nominal account. The nominal account. So under the nominal account, we have It says debit or expenses and losses. Debit or expenses and losses. So whatever losses of the business is supposed to be debited. So let's say we have purchases. Purchases is an expense. So what do we do to purchases? We have to debit purchases whenever purchases increases. We have to debit it. Whenever purchases increases, we have to debit it. Whenever it decreases, we have to credit it. So whenever our expenses increases, we have to debit it. It is saying debit or expenses and losses because they have a debit balance. I will explain the debit and the credit later. But we debit all expenses. Let's put that in mind. Whenever we see nominal account, that's the expenses and then the revenue. We have to debit expenses when they increases, and then we have to credit revenue when they increases. We debit revenue when they decrease, and then so it's vice versa. We debit expenses when they increase, and then we credit it when it decreases. We debit revenue when it decreases, and then we credit revenue when it increases. Do we get it? Okay, so thank you for listening to KS tutorials, and I hope you benefited from it. Continue watching us, continue learning from us. KS tutorials, keep calm. KS tutorials, balance on.